What's up guys, Mustafa is here. Today we're going to talk about credit cards, interest rates, interest charges and fees. A lot of us don't know when and why we get charges for interest, and that's why I'm making this video. First, we're going to talk about interest rate or APR, which stands for annual percentage rate. How is interest calculated? You pay interest on a daily average balance for a balance carried over from a previous billing cycle. That was mouthful, was it? Let's break that down. Let's assume that your billing cycle starts on April 5th and your balance was zero and everyone is happy. On April 10th, you went for a shopping and you charge your card for $100. On April 20th, you went for a shopping again and you charge your card for $50. Now your balance is $150. Then you didn't make any further purchases until you received the next statement on May 5th. Assuming you have an APR of 15%, the credit card provider will do the following formula. Average daily balance times days in billing cycle times APR divided by 365 days. You had $100 balance between April 10th to April 20th, that's 100 times 10 days. And then you had $150 between April 20th and May 5th, that's 150 times 15. Put all of that together, it will give us 3,250. We divide the APR by 365, we get 0.04%. We multiply that by 3,250, we get $1.33, and that's how much interest you're gonna pay for the April statement. Is it possible to avoid paying the interest? Yes, you can forget about all the hassle that I discussed a bit ago by paying the entire statement balance on or before the due date, which is about May 26 in our example. The credit card provider would like you to pay the minimum amount on the statement because they would like to charge you interest on the amount left as a balance for the next statement. Some credit cards charges annual fees for some services or benefits they are offering, like miles, rewards, airfare. Annual fees, unlike APR, you have to pay it whether you're using the card or no. You can consider it as a subscription. Usually it gets charged automatically to the card annually. In other words, you have no control of it. There are two ways to get rid of the annual fees. You can call the provider and ask to downgrade the credit card to a non-annual fee type, or you can cancel the card if that provider does not offer a downgrade option. Why we may want to pay for annual fees? Well, rewards, points, airfare miles, we will get into that in a separate video when we talk about credit cards benefits. What is a balance transfer? It is when you transfer certain percentage of your spending limit directly deposited into your bank account, or you could use it to pay off another credit card balance. Why would you do that? If you have a balance on a card with a higher interest rate, then you transfer that balance to another card with a lower interest rate. Nowadays, some credit cards offer zero interest on a balance transfer for a certain period of time, like 6, 12, or 15 months. Do you want some cash? Well, cash advance is here for you. You can actually withdraw cash from the ATM or from the bank counter using your credit card. The only thing you need to do is to call the number on the back of your card and set up a PIN code. Then you use your credit card as a debit card. The credit card provider usually set a fixed percentage or a fixed number from the spending limit that you can actually withdraw as a cash. There is a big catch on the balance transfer and cash advance, and that is you will pay fixed rate transfer fee, about 3 to 5% from the amount you just transferred. The APR will kick in on the transaction date. So yes, you're gonna pay transfer fee and APR. Not only that, that APR is a must. You're gonna pay it whether you're gonna pay the balance on the due date or no. There's no way around it. Spending limit is the amount that you can charge your card with before the card starts getting declined. Usually the credit card provider allows you to charge your card over the limit with a couple hundreds. Usually you don't know what's your limit until the credit card provider approves your application. Spending limit, utilization rate, and minimum payment usually show when you or someone else check your credit history. But wait a second, who would dare check your credit history other than yourself? Well, when you apply for a credit card or a loan, for example, the lender would need to see your credit history, and based on what they see, they decide what to approve you for. Bonus tip, it's highly recommended that you do not use more than 30% of your spending limit because it's going to affect your credit score negatively. Penalty fees, when you're going to pay penalty fees, If you do not pay the minimum payment on or before the due date, you're gonna pay penalty fees. If your payment was returned for an insufficient account, for example, you're gonna pay penalty fees. If your check was returned, you're gonna pay penalty fees. Credit card providers usually do not charge penalty fees if you go over limit. Well guys, that was it for the day. If you like the video, go ahead and subscribe, smash the like button for the YouTube algorithm because it's gonna help my channel big time, and turn on the bell notification so you get notified whenever I upload new videos. Until next one, you have a good day.